guys, I want to take you through my Loans 101 speech. This is kind of how I explain the differences between FHA and conventional loans. So let's start with conventional. So with a conventional loan, if you don't have 20% down, you're going to have something called mortgage insurance. This is an insurance policy that you are buying for the lender to protect the lender in the event that you don't make your payment. They're not left holding that entire obligation. So with conventional loans, there's several options. When it comes to the mortgage insurance, it can be part of your payment. It can be rolled into the rate, so they increase the rate to cover that mortgage insurance, or you can actually pay a chunk up front to get rid of that mortgage insurance so it's never part of your payment. And they do have some combinations between those scenarios as well that you can do depending on what your situation is. So on a conventional loan, once your loan gets paid down to 80%, you can start requesting to have that removed. At 78%, the lender has to remove that, okay? Conventional loans typically work really well for people with a 680, 700 credit score and higher, because their rates are affected by the credit score and the mortgage insurance changes with the credit score as well. So let's switch over to our FHA brain now. Okay, so FHA also has mortgage insurance also to protect the lender, but they have two different types of mortgage insurance. They have an upfront mortgage insurance that actually increases your loan amount. So if you were at 100, it's going to be higher than that, okay? And then they also have it part of your monthly payment. Now the sticking point with FHA is that the mortgage insurance, if you're putting the minimum payment down, which is usually 3.5%, the mortgage insurance will not go away the entire time you were in that loan unless you refinance or sell that house. Okay, there are some things where if you put 10% down, it can go away later. We're not talking about that. We're talking minimum down payment. So that mortgage insurance will always be part of that loan. FHA is more flexible with people with medical collections, maybe some bankruptcies. You can usually do a loan sooner with FHA than you could on conventional. FHA's mortgage insurance stays the same no matter what your credit score is. So sometimes if you're under that 680 point, it starts to make more sense to do an FHA loan. Okay, there's a lot of details on both of these loans. We know them inside and out. So please give us a call if you have any questions and we'll figure out which one makes the most sense for you and your family. Okay, talk to you soon. Have an awesome day.